If you drive for Uber or Lyft and you have not started thinking about your year-end tax moves, you are running out of time. December 31st is not just the end of the calendar year. It is a hard deadline for several tax strategies that disappear the moment the clock strikes midnight. Once January 1st hits, some of these opportunities are gone for good. This is not a general tax overview. This is a checklist of 7 specific things you need to do before December 31st to keep more of your rideshare earnings. Every item on this list is time-sensitive, and most of them take less than an hour. Welcome to the Freelancer's Wealth Blueprint. We help freelancers, gig workers, and self-employed professionals understand taxes, build savings, and stop leaving money on the table. If that sounds useful, subscribe and hit the bell so you do not miss what comes next. Let's get into the 7 items. Grab a pen or open your Notes app. You are going to want to check these off. Number 1. Maximize your remaining mileage deductions. The 2026 standard mileage rate is 72.5 cents per mile. That is one of the most powerful deductions you have as a rideshare driver, and every mile you drive for business between now and December 31st counts toward this year's tax return. If you have been inconsistent with mileage tracking, now is the time to get serious. Open your mileage app and confirm it is logging every trip. If you have gaps earlier in the year, reconstruct what you can using your Uber and Lyft trip histories. The IRS allows you to use driver app records as supporting documentation. If you still have driving days left this year, every additional business mile is worth 72.5 cents in deductions. A driver who logs 1,000 more business miles before year-end adds $725 in deductions. That is real money off your tax bill. Number 2. Make retirement contributions with a December 31st deadline. Here is a detail most rideshare drivers do not know. If you have a solo 401k, the employee elective deferral portion must be contributed by December 31st. That is up to $2,400 for 2026, or $3,200 if you are 50 or older. This is not an April 15th deadline. It is a December 31 deadline. Miss it, and you cannot go back and make that contribution for the 2026 tax year. Now, if you have a traditional IRA or SEP IRA, those contributions can be made until April 15, 2027. But the solo 401k employee deferral is a use it or lose it December deadline. If you have a solo 401k and you have not maxed out your employee contributions, calculate what you can still contribute and make that transfer before the end of the month. Number 3. Do a Q4 estimated tax true-up. Your 4th quarter estimated tax payment is due January 15th, 2027. That means right now is the time to calculate whether your quarterly payments for the year have been on track. Pull up your total income for 2026 so far. Look at what you have already paid in estimated taxes for Q1 through Q3. Then project your income for the rest of December. If your payments are short, you want to know now, not in April. The IRS charges underpayment penalties if you have not paid at least 90% of your current year tax liability or 100% of your prior year tax through estimated payments. A true-up payment made before January 15th can eliminate or reduce those penalties. Do the math now while you still have time to adjust. Number 4. Conduct a receipt and expense audit. Before the year closes, go through every business expense you incurred in 2026 and make sure you have documentation for it. This includes phone bills, car washes, phone mounts, chargers, aux cables, water and snacks for passengers, parking fees, tolls, and any other rideshare-related costs. Check your bank statements and credit card statements month by month. Look for expenses you may have forgotten to log. If you are missing a receipt, many vendors can reissue one electronically. It is far easier to track down a receipt from 3 months ago now than it is to try to find it next April during tax prep. The goal is a clean, complete expense file before January 1st. Number 5. Review your 1099 expectations. In January or February, Uber and Lyft will send you your 1099 forms for the 2026 tax year. Before those arrive, you should already know roughly what to expect. Log into your Uber and Lyft driver dashboards and pull your year-to-date earnings summaries. Compare those numbers to what you have been tracking on your own. If there is a significant gap between what the platform shows and what you have recorded, figure out why now. Common reasons include incentive payments, referral bonuses, or quest bonuses that drivers forget to account for. Having a clear picture of your gross income before the 1099s arrive means fewer surprises and faster filing when tax season starts. Number 6. Make charitable donations before December 31st. If you want to claim charitable deductions for the 2026 tax year, those donations must be made by December 31st. Under the One Big Beautiful Bill Act, there is now a non-itemizer charitable deduction available even if you take the standard deduction. You can deduct up to $1,000 in charitable contributions as a single filer, or $2,000 if you file jointly, without itemizing. That means even if your total itemized deductions do not exceed the 16th of $100 standard deduction, you can still get a tax benefit from charitable giving. Cash donations to qualified charities count. So does donating goods at fair market value. Keep your receipts and any written acknowledgments from the charity. If you drove miles specifically for volunteer or charitable purposes, those are deductible at 14 cents per mile, which is a separate rate from your business mileage. Number 7. Plan your tax structure for next year. The last week of December is the best time to evaluate whether your current tax setup is working. Ask yourself these questions. Am I tracking mileage consistently? Am I paying enough in quarterly estimated taxes? Should I open a retirement account before next year? Is my record-keeping system actually working, or am I scrambling every April? If you do not currently have a SEP IRA or solo 401k, research your options now so you can open one in January and start contributing from day one of the new tax year. If your quarterly payments were off this year, adjust your Q1 2027 payment amount before the January 15th deadline. Planning in December is free. Fixing problems in April is expensive. That is your 7-item year-end checklist. Maximize remaining mileage. Make retirement contributions with December 31st deadlines. True up your Q4 estimated taxes. Audit your receipts and expenses. Review your 1099 expectations. Make charitable donations. And plan your structure for next year. Every one of these items is something you can do this week, and every one of them can save you money or prevent a problem. If this was helpful, subscribe and turn on notifications so you catch the next video. Share this with a driver who might be forgetting about these deadlines. And drop a comment below if there is a year-end move you have been doing that I did not mention. I read every comment. This content's for educational purposes only and does not constitute tax advice. Consult a qualified tax professional for guidance specific to your situation.